What's up, guys? Welcome back to another video. We're gonna get straight into this, guys. We're gonna talk about psychology, and I'm gonna break down these two things here that's gonna completely help you with psychology. Number one, we're gonna be talking about your trading plan. That's the first key, and the second key is gonna be the boom and bust cycle. We're gonna talk about that after. First, we're gonna talk about the trading plan. Okay, your trading plan is gonna be literally one of the most important things that you need, guys. If you don't have a trading plan, stop. All right, stop what you're doing. Create a trading plan. All right, inside of your trading plan, you're gonna have your strategy, an objective strategy. We'll talk about that a little bit more. You're gonna need data, right, from that strategy. That should really just be connected here. You're gonna need data from that strategy, and you're gonna need your warm-up journal, and I'm gonna show you guys that, and you're gonna need a routine. Okay, that should all be within your trading plan. And inside of that trading plan, well, inside of this here, you're gonna have what? Risk management rules, risk management. Okay, risk management. That was incorrect. All right, so boom, there we go. Risk management. These are the things that you're going to need inside of your trading plan. First thing we're going to talk about here is your strategy. Your strategy, you need your rules and you need risk management. You see here that I put objective strategy. I put an objective strategy here for a certain reason. Okay, when you're creating your strategy, whether it be supply and demand, whether it be ICT, it doesn't matter, guys. Whether it be smart money concepts, it doesn't matter. Find the strategy that works for you. Every strategy works. Don't let these gurus and all of these influencers trick you into saying, oh yeah, this is the best strategy. Only trade fair value gaps. Only trade ICT. Only trade smart money. Only trade this. Only trade supply and demand. Every strategy works, guys. Do not get caught up in that facade. Okay, for example, me, I trade liquidity, I trade Wyckoff, and I trade supply and demand. Okay, I'm using these three main concepts to create my strategy. Inside of that strategy, you want to create rules. You want to create your rules and your risk management profile. How much are you risking per trade? What's your target? Okay, for example, I'm going to show you guys my personal rules right here. Okay, this is my personal rules. You guys can go through it. You guys can copy it, save it, whatever you need to do. This is my personal rules. All right. All of here, these are the rules that I use for my strategy. Okay. Also, I have it right here as well on my charts. So you guys can see 1, 2, 3. Okay. First section of my strategy is finding my directional bias. After that is finding my supply and demand zones. Directional bias, I use market cycle, momentum, and premium and discount, right? We're just marking out structure. So for example, on a daily time frame here would be marking out structure, looking to see what schematics we're seeing. If we're seeing accumulations, that means directional bias is bullish. If we're seeing distribution, that means mainly our directional bias will be bearish. In this case right here, we have a bullish structure from this low to that high on the daily time frame, right? I start on the daily, I go to the 4 hour, and then I go to the 1 hour, and that'll give me my directional bias overall. And then once I get down to the 1 hour, that's when I'll start marking out my supply and demand zones, and then that's when I'll look for my setups, right? I'm either looking for an A setup or a B setup. Most of the time, I'd say 80% of the time, I'm looking for an A setup. I'm looking for a manipulation, a clear impulsive move, imbalance, and a change of character following my bias, okay? And then the B setup would be based on Wyckoff. So if you understand Wyckoff, cool. If you don't understand Wyckoff, you don't need the B setup, right? I mainly use the A setup. The B setup is just in case. That's going to be for confirmation entries. It's going to be for reaccumulations, redistributions. So that is my rules, okay? Data, right? That's the next step. Back test and forward test, okay? You want to back test. So when you're back testing, your goal is to take at least 20 trades, okay? That's your goal. Once you have your rules, your risk management, go into TradingView, or you can use a back testing software. For example, I used to use FX Replay. So, well, I still use FX Replay, but FX Replay is what I use for a back testing software. And then of course you could just use TradingView and use the replay feature there as well. Basically, you go into the charts and I would look for 20 trades that match one of these two setups, and I would take every single trade no matter what. You need the back test and you need your forward test. Okay, so back testing data, you're gonna get that with back testing, and you're gonna when you use your replay feature and you go back in time. Your forward test data, you're gonna get that once you have that 20 trade sample size. So after you get that 20 trade sample size, you want to look at it and you want to see what is your win rate based on 20 trades. Did you end out profitable at the end of 20 trades, or are you in negative at the end of 20 trades? That's going to let you know whether your strategy currently is profitable or not. If it is not profitable, go in, move some things around, go into your rules, look into your rules, adjust some things, and then try again. Try another 20 trades. But let's say you come out of those 20 trades and you are profitable. Now, what you can do is buy a challenge account. It doesn't have to be a large challenge account. Maybe a 10K account or a 25K account. Don't go for a 50K, 100K account to try to forward test this strategy. That's not what you want to do. Go for a 25K account minimum, or maybe a 10K account, right? Something small that won't affect you. The point of that is you want to expose yourself to the live conditions of the market. We all know when we backtest versus trading live is two completely different things, okay? So the forward test here, the reason why you want the small account is so you can forward test comfortably, okay? Your point is take 20 trades on your challenge account now, the same way you just did your back testing. Now, when you take those 20 trades on your challenge account, now you see, okay, did I pass my phase 1? Did I pass my phase 2? What happened? Am I getting emotional? What's the difference between my back testing data and my forward testing data? Did I trade the same way? That's where you're going to do that at, right? That's when you can compare these two. You can compare your back testing data to your forward testing data. And now you want to make sure that you're following the same plan and you're taking the same steps as you did when you were back testing. Once you have that back tested data and that forward testing data, you want to create a warm-up journal. What is your warm-up journal? Your warm-up journal is basically going to be the thing that you look at every day before you start trading. So your warm-up journal is basically going to be your back test and your forward testing trades. So when you're back testing, take a screenshot of each trade, each loss, each win, each break even, each reduced risk, whatever it is. Make sure you are recording and you're taking screenshots of your trades. And basically take a screenshot of each trade, win or loss, break even, and put it in a folder. And that's going to be your warm-up journal. I'll immediately go here. You can see I already have it named warm up, right? I have 2 of them. So let's go for this one, the example. Basically, I will go here and I would just click randomly. Boom. And I'm basically just shuffling through my trades. Right? And what that is doing is that is showing me my wins. So basically it's showing what my wins look like. It's showing what my losses look like. It's showing my break even look like. And it's basically exercising. I'm basically warming up. It's like stretching before working out. So I'm basically exposing myself to the charts and looking to see, okay, this is what I should be looking for. This is what I not should be looking for, right? It just gives me an idea of what my setups look like. So when I get to the real live markets, it's going to be easier for me to spot my setups, okay? Next, a routine. Basically, your routine is going to keep you consistent throughout your whole day, all right? What you want to do, your routine could be whatever you want it to be. Let's say you wake up, you brush your teeth, and you take a sip of coffee or you read, okay? That could be your routine before you start trading. Just make sure you have a consistent routine before you start trading. If you just want to wake up, hit the charts, wake up, hit the charts, right? If you're going to wake up, read, maybe get some coffee, maybe take a shower in the morning, do that every morning, okay? Try to get as consistent as you can before trading. Make sure you're always looking at your warm-up journal. That is part of my routine, to look at the warm-up journal before I start trading, okay? That is the trading plan, guys. That is the first step to your psychology. This is gonna help you become confident of what you're doing because you know you actually put the work in, you found the data, you made the strategy, you made your rules, you seen that it worked, right? You took the trades, you took your 20 trade sample size. This is showing you and giving you that confidence. Hey, I have a trading plan. I know what I'm doing, okay? That's the first step in your psychology, the trading plan. Have the trading plan down packed. So the boom and bust cycle here is a simple diagram that shows how emotions in winning trades versus losing trades, how those affect traders over time. So for example, here, we're going to go into the first area right here. This is the common boom and bust cycle of a trader. This is common what happens for an unprofitable trader. As you start trading, let's say you're taking wins and your equity is going up, you're making profit. Once you get past this is going to be your equity line, okay? And you see how this equity line is straight. This right here, this cycle, this diagram is for an unprofitable trader, a break-even trader, okay? Because the problem is, when you start trading and you start taking wins, we start becoming overconfident. You start thinking, oh yeah, I know what I'm doing. I have my strategy. I can take this setup. I can take that setup. You get overconfidence. You start feeling euphoria. You start feeling euphoria and confidence, overconfidence. I should have really written that as overconfidence, but you start feeling euphoria and overconfidence because you're taking winning trades. Your setups are winning. Your market's winning. Every trade you take, you seem like you're winning, right? You're taking winning trades. You get overconfident to the point where you start taking low quality setups. All right. You start taking low quality setups. And I know some of you are like, nah, I don't do this. I follow my trading plan. That's good, right? That's good. This is for the people that are struggling. You start taking low quality setups because you're feeling that euphoria. Okay. And what starts to happen is you start taking losses, obviously, on those low quality setups. So you start taking losses, right? You start taking losses. You start going back down. You're like, nah, man, what am I doing? As you take these losses and your balance is going down, and you're like, man, what am I doing? And you go back and you're like, that wasn't even a trade. That wasn't even a setup. Why did I take this setup? That didn't follow this rule. All of my rules wasn't met. You start making these little mistakes because of overconfidence, because of, man, all I need is 1% more to pass my challenge. So let me just take this trade right here. The market should be going higher, right? I know it's happened to all of us. That's what gets you into this bust cycle, right? The boom is caused by overconfidence. The boom is caused by overconfidence, euphoria. That's when it leads you into the bust. Once you get into the bust, that's when you go back and you're like, okay, let me only take A+ setups. I'm in drawdown now. Let me only take my A+ setup. Let me wait for my rules. And then you start winning again. You start winning again. You start winning again. You start winning again. Then it's the same thing over and over again, guys. You start winning, then you start taking low probability trades again because you're winning, and your balance start going back lower. You start getting into back into drawdown, and it's a repeating cycle over and over again. Okay, so that's the cycle you want to stay out of. Okay, it leads to what? Overconfidence, fear, and doubt. What do we need to do to fix this boom and bust cycle? You need to change your perspective on winning or losing. You can see I have these two connected, and we'll talk about this. Winning does not mean positive. Losing does not mean negative. Okay, we need to change our perspective on what winning and losing is. Okay, because we know as traders, once we take a winning trade, we start being, we're happy. We're happy. We start being happy. The day is happy. We go outside. We're smiling. All of this stuff, right? We start getting our emotions in there. Okay. We think winning a trade is positive. Losing a trade is negative. So when you take a losing trade, you're sad. You're doubtful. You're like, man, is this strategy even working? What's going on? When you get into a losing streak. Okay. And that happens with every strategy. You're going to take like 2 losses in a row sometimes. Maybe sometimes 3 losses in a row. And when we go on to those 2-loss losing streak, 3-loss losing streaks, right? You start thinking, man, this strategy might not be working anymore. What am I doing? All of this kind of questioning in your mind is what's keeping you inside of this boom and bust cycle. What I want you to do is, winning means that you followed your trading plan. That's what winning means. Winning means you followed your trading plan. Losing means you did not follow your trading plan. So if you take a trade and the trade, whatever happens to the trade, doesn't matter. If you take a trade, the first thing you need to do is ask yourself, did I follow my trading plan? Yes or no? If you followed your trading plan, automatically in your head, it is a winning trade. Okay, it doesn't matter if the market, if the trade itself becomes a losing trade, if you hit stop loss, it doesn't matter, guys. Count it as a winning trade. Count it as a win for yourself because you followed your rules. What that's gonna do is that's going to get you here. That's gonna get you to this point right here, to stop avoiding losses. Losses are important for your trading plan, guys. You need losses in your trading plan. Every single trading plan, every single strategy has losses. There is no 100% win rate strategy, guys. Stop listening to these gurus and all of these people on social media only showing you winning trades. Every trader takes losses. The way you become profitable is that your winning trades cover your losing trades, okay? Okay, so after you successfully change your perspective on what winning and losing in these markets is, like we said, link it back to your trading plan. Now, we talk about detaching yourself from the outcome, okay? Detach yourself from the outcome. Do not worry about, okay, is this trade going to be a winner? Is this trade going to be, that doesn't matter. Did you follow your trading plan? Yes or no? If you followed your trading plan, take the trade. That's it. That's your job is done. This is something that I tell my students in the mentorship all the time. Once you identify a trade and you identify a setup, you back test it, whatever the case may be, once you place that trade and the market activates that trade, it's over. That's it. Your job is done. Unless you need to go break even or reduce risk based on your rules. Of course, when your rules tell you to go break even and reduce risk, your job is done. Do not worry about what happens. Don't worry about what happens with that particular trade. Stop looking at individual trades. And let me add that in here as well. Stop looking at individual trades. Remember what we talked about, a series of trades. Okay, so the way to correctly look at your trading is look at it in series of trades. So you could either do 10 trades at a time or 5 trades at a time. To make it easier, let's say 5 trades. So as you're trading live, when you take 5 trades, then you go and say, okay, this trade was a winner, this trade was a loser, this trade was a winner, this trade was a loser. Then you go and look at those series of trades. So detach yourself from that outcome, okay? Do not worry about what happens to the trade. We've already back tested. We've already made our data. We know that these markets are uncertain. So you could have an exact perfect setup. Exactly perfect setup. And I've seen this so many times. You know, you have a setup, it follows all the rules, structure is lining, everything is good. And the trade becomes a losing trade. What can you do about that, guys? You can't do nothing about that. That's a perfect setup. All you can do is like, okay, I follow my trading plan. All right, next trade. That's it. That is going to lead you into the neutral mindset. And that's what we're going to talk about next. Okay. This here is a positive equity curve. This here is a break-even unprofitable equity curve. Okay. This is how your equity curve should look. Meaning you want to stay in a neutral mindset. That's what's going to get you here. If you have a profitable strategy, and you should, because we back tested it, we build data, we know our win rate. So when you follow your strategy, it's going to give you a positive equity curve that leads up. The only difference here between this unprofitable trader and this profitable trader is that this trader can control his emotions. He's staying into this neutral mindset. So what does that mean? That means as he's taking wins, let me put that as green. As he's taking his wins, all he's doing is following his strategy. He's taking wins. He's like, okay, I'm taking some wins. He's not getting overconfident. He's following his trading plan. He's like, okay, I have a setup, take the trade. Let's say he takes a win, he takes some wins. And then let's say he goes into a losing streak. Let's say he's following his trades. As he's taking these wins, he's not over leveraging. He's not increasing his risk. He's not changing nothing. He's taking his A setups. He's taking his high probability setups, and he's just following his trading plan. And a result of that, he's getting this profit. Now, because every strategy has a losing period, every strategy you will see losses. When he takes losses, right? He's also in a neutral mindset. He's not getting into the fear or hesitation. Once he starts taking losses, he's not, okay, maybe I should lower my risk, or maybe let me skip this trade. This trade doesn't look as good as the last one, even though both trades follow his rules, right? You don't want to start thinking about that. You're like, okay, well, this trade doesn't look that good. I'm already down 3%. I've already took like 3 losses. Let me just skip this one and wait for the next one that looks better. No, take the trade. If it follows the rules that you have set, take the trade. So he's still taking his trade. He's just, okay, this is part of my trading plan. I've seen these losses. When I shuffle through these guys, you see these losses, right? You guys see these losses, right? You see that there are losing periods, right? A setup, lose. Okay, I think that was a winning trade. Let's see. Loss. You see that there's losses in here as well. Okay? That's why we journal the wins and the losses, because you need to see that there's times that your trading plan, that your strategy will lose. You need to see that, okay? So when you start taking those losses, you don't become hesitant. You don't become fearful. You don't become doubtful, okay? You accept this losing period inside of your trading plan, because when you do that and you continue following your rules, you're going to see that, okay, then the probabilities are going to come back and work back in your favor, because that's just how probabilities work. All right, if you have a coin and you flip the coin and you're always betting on heads, at some point you're going to get heads. Sometimes you're going to get heads multiple times in a row. Sometimes you're going to get heads, you're going to get tails, you're going to get heads, you're going to get tails. You don't know. You got to change. You got to think about trading in that same fashion. You don't know which trade is going to win. You don't know which trade is going to lose. Your plan is to follow your strategy and follow your trading plan. So when that winning trade does come, you're a part of the trade. When that setup does show up, you're there. Okay. Your goal is to show up every day and take the setup when it shows. Okay. So you're going to take these setups, and some of them are going to get losses. Some of them are going to take you down. Some of them are going to take you back. They're going to take some profits. And then you're going to see, okay, then the winning trades are going to start coming back up, right? You're going to start taking some A setups. You're going to start taking some good trades, they get you back, and then you're going to do the same thing again. You're going to take the losses back to the downside. You're going to see the losses come back, and you're going to see the wins come back, right? It's going to be back and forth, back and forth. But what do you notice here? Your equity curve is going up. This is a profitable trader. You need to stay neutral. You need to stay neutral. Your emotions for your strategy, for your trading plan to give you that positive equity curve and that consistent profitability, you need to stay in this neutral mindset, okay? After every win, after every loss, you need to stay the same, okay? So let's say today you took a trade and it was a winning trade. It is okay to be happy about that. But be happy because you followed your trading plan, not because it was a winning trade. You understand that? So that changes your perspective on winning and loses. You're happy, like, okay, I followed my trading plan. It was a winning trade. Good job to me to following my trading plan. Don't say good job that it was a winning trade. Don't put that out there as in, yeah, I'm happy this was a winning trade, or I'm happy this. No, you don't know which ones are going to be a winning trade. Tell yourself, I'm happy that I followed my rules and I have a winning trade today. Okay, next day, let's say you take a loss. Same thing. I'm happy that I followed my rules. Today, the markets did not go in my favor. That's it. That's it, guys. And you want to keep that neutral mindset. Keep that neutral mindset that gets you back into that break-even state. You don't want to, after a losing trade, you take a loser, you don't be like, man, I don't know what's going on. You don't want to feel like that. Don't put yourself into that, because that's going to make you hesitant. And when you become hesitant, you're going to be scared of taking the next trade, and the next trade might be the winning trade, right? But if you're not there because you're stuck in your head and your emotions, you're not going to take that trade. So make sure you're staying neutral. It is very important, guys. Losses reminds you of the risk of trading, and that is true. Okay, it is important, guys, that you understand that this market is uncertain. Okay, you're going to take losses. It is okay. It is okay. Everyone takes losses. I take losses. The best trader that you know takes losses. Trust me. Your goal here is to build this trading plan, build your routine, make a warm-up journal like I showed you guys. Data, backtest, and forward test. I showed you guys how to do that. I told you guys what to do. Create your objective strategy so you can backtest and forward test. Create your rules and your risk management on your objective strategy. Once you have your trading plan, then this is what you need to remember. This boom and bust cycle, okay? Detach yourself from the outcome. Stop trying to avoid losses. Change your perspective on what winning and losing are, okay? And master a neutral mindset. After every trade, you need to get back into a neutral mindset. It is okay to feel happy after a winning trade, but make sure you bring yourself back down to reality. Humble yourself after every trade, whether it's a loss or a win. Make sure you're back to that break-even line within yourself. This is it, guys. This is psychology. That's it. If you can remember this and come back to this video as much time as you need, this is all you need to master your psychology. It's this simple. That's it. If you follow these things that I just told you and you do this and you stay consistent for the next 6 months, I promise you will be profitable. I promise. Okay, you just need to stay consistent. It might take more than 6 months. You need to stay consistent. But I appreciate you guys for being here. If you guys have any questions, any concerns, please let me know. If you want me to touch up on this or, just break down some more things in here, let's say you guys didn't understand some of these things I was talking about, anything in here that you want me to break down further, please let me know. And I will see you guys in the next one. Peace out.